Hello, everyone. Hope you guys had a good weekend. And today I'm bringing you guys some VDSI. First of all, I just want to let you know that ODI Trading, we're not financial advisors, okay? So VDSI, the reason why I'm bringing it over is because I see like it has really excellent fundamentals. And also right now, as far as graph goes, technical analysis is looking good. All right, so this is VDSI, and this company has two products and they're mainly focused in chronic pains. Okay, so this products actually helps you with those chronic pains, which chronic pains usually are pains that stay longer than normal. All right, so if you guys have any questions right here, uh, we got um, we got their website. So let's go ahead and take a look at the financials. Okay. So first of all, this company is in the launch stage of a corporation cycle, meaning it's at the beginning of it. And it's in the healthcare sector. Right now, the stock price is at $3.69. The fair value is about $4.32. So there is a discount right now if you buy it. Book value, it's $1.08, which means that if this company was to bankrupt tomorrow, that's how much you actually get. This is recommendation from analyst, and it's actually 1.9, meaning 1 is actually a buy and 5 is a sale. So right here is close to a buy. As far as Saks.com, they have a 4, which is close to a sale since 5 is a sale. So different views. As far as where is in the chart, right here. This is VDSI for the past uh, 3-4 years. All right, so as you can see, if we remove everything from here, just here we go. All right, so as you can see, this is a support. Okay. All right, so it looks like it's coming something such as looking like descending triangle at some point. All right, so something along these lines. Okay, so now taking a look at technical analysis wise, this actually um this last downtrend is actually a bullish divergence, and you can see it right here on the MACD. There is a bullish divergence right here. Okay, from here to here, and as you see, it started changing trend and it starts going up. In my opinion, it could go all the way up to $4.16, and so it is halfway from the support. So I'm looking into, it has a good chance because of this bearish pin bar. It might try to come back, try to touch 363, and maybe try one more time, or it could just try to touch the 350. All right, let's go ahead and take a look at the financials. First of all, as you see, the fair value is about $4.32. Another thing is that it has already had initiated ratings to buy or sell. In this case, it has Northland Capital, Piper Sandler, and SunTrust. They have set ratings to buy or overweight or outperform, and it's like a $9 sell target or target price in this case. Okay, $7 to $9. All right, so going back over here, what about the operating expenses? This is how much are they actually um, their salaries are compared to the revenue that they get. So they actually their revenue are actually increasing. So I really like that. So let's go ahead and talk about income statement. As you see, the revenue is increasing, and the net income actually went from negative to positive. All right. Now let's go ahead and take a look in there. If my let's see, it's just that my internet. Um, all right. Let's go. Okay. So right here we got it. This is the income statement. This is the annual. And as you see, their revenue has increased tremendously. All right. And what I really like about this company is the cost of revenue. As you see, they have a very big margin. You see here, their revenue was 156 million, and all they spent to create, for the costs is 24 million. This one is 111 and it was 21. You see, it has a nice gross profit margin. But now let's take a look at actually how much do they actually need to operate. So in this case, they actually um, for this year, they needed 98 million to operate. That's salaries, that's everything, benefits, and so on and so forth. So at this point, they actually need 98 million of that revenue in order for them to operate. So it's a lot, but oh well. But take a look at it. Take a look at this right here. Um, if you actually do the math on it, um, their their revenue, sorry, their operating are being operating costs or expenses right here. Every time is less because look, 98 compared to 156, which is the revenue right here, that's like 62%. Now let's take a look over here. Um, 86 compared to 111. All right. And this right here actually is like about 77%. Okay. So at this point, as you can see, this now it only took 63% of the 156. Okay. You can see it right here in the total operating profits. Here they got 32 million dollars, but if you actually go from the back, it goes from negative to less negative to actually start having positive. All right, and at this point, it's not even we're not talking about net income because net income is actually way below all this other expenses. All right, but now let's go ahead and take a look at net income. So right here is our net income, and it goes from negative, very negative, to being less negative, and finally positive over where are we? Net income right here. Okay, so it's almost the same right here. So it goes from very negative to less negative to actually positive. All right, so if we take a look at graph wise, it goes positive here. Net income is actually getting finally positive, and then balance sheet actually is going the assets are growing, the debt is going up a little bit but not as much. So you see this is almost the same and this is just a little bit more. And then let's see the cash flow goes from being very negative to actually being positive. Now here the financing, which is the yellow, is actually money that they have raised through stocks. Okay, so they sold some stocks here on this year and this year, and then this year they actually didn't sell stocks. They actually took a loan of $20 million, so they're not, it looks like they're not selling anymore, and they actually bought shares back. By the way, they used to have like 100 million out there, and now I think they have only 96. So they have been buying back shares, so that's a plus definitely. All right, so we already talked about revenues increasing, net income is now increasing, assets is increasing, debt, it's slightly increased, but not as much. Cash flow from operation, it's increasing. Um, Cash flow from investing, they have not invested, as you see, this right here. All right, so usually this is because they have either purchased or they have bought, but here nothing has happened really much this year, so nothing significant. Cash flow from financing here, as I already talked about, they actually sold shares in 2018 and 2019. 2020, they actually just did a loan, that's it. What I really like here is this part. Their gross profit margin compared to the industry, it's a big difference. That's BDSI. And as you can see, this is BDSI, this box right here, and this is the industry. They outperform the industry completely by far. All right. So as you see, it's above the industry. Now, the PEG ratio, it's amazing too. It's only 0.60. Something good is something less than 160. So the PEG ratio is awesome. That's evaluation. Current ratio, the current ratio, this is great too because it means that uh, they can pay their current liabilities 3 times. They have the money available to pay that off if they had to. They do have debt, as you guys know, that I talked about. So they do have lead long-term debt. So it's only 0.72. And that's like what? In a million? So probably like 72, 720 or something along those lines. But anyways, this number is low, right? Uh, EPS next 5 years. So it means that they see like a growth rate of 25%, which is really good. They have an insider own. They only own 1.50. However, percent of the outstanding shares. However, they have been buying shares and they just bought it. And you can see it right here. All of these directors, they have been buying shares as of May. So that's really good. That's a really great sign. And institutional owns is 72%. And in this case, the return on equity, it's really good, it's 26%. And the shares outstanding, it says 100.99 million. And your ATR is how much the stock moves per day. So it's like 10 cents. So if you guys are okay, if you guys are actually okay, having a slow growth for this company, um, great. But as you see, it only moves like about 10 cents per day. And I am just trying to see. I'm probably going to join tomorrow by BTSI. I already bought a few on Friday. So I bought it. I'm positive. I bought it like a 370 or something. I'm a little bit positive. No, not positive. 370. I think I bought it. So a little bit red. That's what I meant. So I don't mind. But as you see, it's a really great company, and I'm thinking that it might go all the way to $4 and hoping to actually break out if that is the case. But I'm not saying they will break out. It's just that that's a resistance for me. So technically I will probably sell like a $4, making some 40 cents gain or somewhere along those lines, or 30 cents gain. So yeah, this is a good company if you guys want to invest in something for that has good fundamentals, and it is in a certain type of close to a bottom. There you go. Here's a company you guys can look for. Well, thank you for giving me your time, and have a good day. Bye bye.